Does Wall Street care about only one thing right now, Nvidia's performance, and not what the Fed's going to do next? Well, this week we'll put it all to the test with the inflation gauge that the Federal Reserve cares about most coming up. Also, 8 times is the trick. How many periods have we seen Nvidia do this? And more importantly, what does it tend to do next? Today we'll break down the stats revealed after an earnings period for one of the most important stocks in the world. Also, SMCI currently following the trend that we suspect is the worst still to come for that stock. S&P 500 holds everything. And are we seeing the rise of the alts? Yes, Ethereum is starting to outperform Bitcoin for the first time in a while, breaking through the trend line. Today, we'll discuss that and everything else around the world for the week ahead, including stocks, commodities, and cryptos. Well, welcome back everyone to the special weekend edition of the Markets Around the World. My name's Tom. We've been running the show for over 3+ years and we're covering everything to do with the macro, some big volume analysis, and of course the key levels you need to be watching. Let's talk firstly about Nvidia because of course this stock was rocking the world over the last week and it moved everything in a big way. Just a reminder, we do have a special options report coming out, completely free, VIP weekly newsletter in the links in the description down below. Within one day, we'll be releasing that, so make sure to check it out. Name, email address, that's all you have to do. Microsoft, Apple, Nvidia. These are the stocks that have entered the $2 trillion club, and you can see it took a while for the other stocks to do it, but Nvidia has gone up in a vertical kind of FOMO phase. Is it too fast and too quick for that stock? Well, let's have a look at the last 8 reads and 7 separate reads where we've had multi-year highs, and more importantly, we've had gap ups followed by gap downs of over 2%. Now, the gap down where we lose at least 2% from the open to the close while at the multi-year high is what we're most interested in. In fact, when we've seen these reports over the next couple of weeks, Nvidia has dropped every single time. So basically it's 100% read over the last 7 periods this has happened. And it's no joke, we've seen some pretty big moves, upwards of around that 11 to even upwards of 15% from the moves here. Now, of course, there's a lot at stake for this stock. So while the trend still is bullish, the stats are starting to look a little bit scary after what has been a euphoric run for the most important stock in the world. So will that happen? We'll take a look at it a little bit later on, but let's talk about equity risk premium, probably the discussion from Mike Wilson from Morgan Stanley from 2022, which he brought up the most. And this for good reasons here. Basically, what equity risk premium is telling us is that in comparison to bonds, stocks are currently expensive. Now, I thought this was a great chart because what it brings up for us is it tells us that things can get much worse before they technically switch. This is the 2000s dot-com bubble versus where we are currently with ERP. But there's no doubt that bonds are still historically cheap compared to where we are in the stock market. And it's getting to a point where you're going to start scratching your head and saying, should I really be looking at stocks as much as I currently am? Well, for now, we can see that there's a little bit more to go before we hit that 0 level, but certainly it still holds true. The problem's going to be timing is everything, and we'll be keeping a look on, or an eye on at least, equity risk premium moving forward. Now we'll go over to Wayne's data, and he's got a bit of a big one here for the bulls, because guess what, bulls? It's really good news. Wayne's gone through and he's pulled all of the data compared to now, and he's found that generally when we have a March or a December, January, and February that are positive, then we have a March to February run that is 25 and 0. Yes, you heard that right. Another 100% stat where if we're going from now all the way through to the end of this year and the start of next year, we tend to always be bullish. So the results are good for the bulls in the markets right now, with pullbacks being met generally by bull demand. And it's not like we've just got one read here. We have quite a few. And remember, it is an election year, historically one that we've never gone into a recession during. So let's talk stocks now. We mentioned the idea that SMCI, and I think individual stocks are going to be the most interesting moving forward, fell in 20% in one day. Now that is not a positive for the stock. And we thought that we would get a buy the dip from retail and Wall Street, which would then show excitement, and then we would see a sell straight after that. Now, we talked about this in our last video. Of course, it was up 33%, and I never expected it to hold that. That is a big number, purely driven off Nvidia speculation. And of course, it lost over 11% in the next trading session. Now, the question is, are we going sideways for 3 to 6 months or are we going down? These still remain the two most likely scenarios for SMCI, and we will be following it together moving forward. For the bears as well, do we have any types of situations where CTAs have reduced? We saw a small reduction last week, followed by an uptick. So realistically, CTAs still max leveraged long, and we're looking for the signs of them actually weakening off. Guess what? They haven't right now, and we're also looking for home builders and bonds to start to weaken. And again, we just haven't seen it yet, so we'll talk about that if it does occur. Because earnings season is basically through, the biggest stock has now reported that was the most important one, which was Nvidia. We move over to what are the forward projections? Is this market cheap? Is this market expensive? I posted this over on our X, links in the comments description down below. And you can see here that in terms of the buy, hold, and sells, these are the general ratings. This is the forward PE ratio, which I really encourage people to have a look at. And as I commented on, there are very few that are currently hitting their 10-year averages or 5-year averages. The forward PE overall is quite high in terms of general market expectations. Obviously, really, really heavy in the consumer discretionary and infotech world, but still quite expensive across the board. Some sectors like utilities and energy, maybe they're arguably underpriced, but this is what JP Morgan and FactSet have in terms of their overall valuation. Are we back to 21 highs? No. Are we a standard deviation away from where we were? Yes. And just a quick reminder, one of the biggest levels for you to always be looking at as a dollar cost average investor or anybody that's looking to invest in general is around that kind of 15 to 17 level. If you can get in there somewhere around forward PE, you're looking very, very nice over the long haul when it comes to dollar cost averaging and buying into the stock market. Let's now talk about sentiment. We brought up some sentiment reads, and it of course all shows that generally if you're contrarian, this would be a point where you'd be very, very anxious about the markets. But as it turns out, the bears have still not returned. And you can see here in the reads, we've seen historically low bear readings, although bears have gotten a little bit bigger around the 5K coming into Nvidia's earnings. And bulls remain elevated well above the averages. 37.5, still 40s at this stage. And that's because, of course, we're seeing calls that are incredibly elevated in these markets. Whether the US market is cheap or expensive, well, you can guess if you want to, but realistically, this chart shows you that the US market is still quite expensive. One of the main reasons is, of course, it's got that AI strength in it, though. So it has the best, most innovative companies in the world in general. Therefore, it's being demanded. But it is expensive compared to the rest of the world at this stage. Do we have any concerns about margin debt? This is one that I often get asked a question of. But what about the leverage inside of the stock market? Are we at a point where we're going to blow up because of that? Well, as a percentage of the S&P 500, not really. We're nowhere near the levels of the GFC. We're nowhere near the levels of the dot-com bubble in terms of market capitalization, leverage, margin debt. So we don't need to be worried about that particular component right now. Nor do we necessarily need to be worried about the bubble AI component at this point. According to Bank of America, most historical asset bubbles have seen volatility rise substantially prior to bubble peaks. Now, we have seen vol rise a little bit, but not substantially yet in comparison to old history. And this usually means we're in what we call a momentum-based market. So you're going to see a lot more of 2021 style moves, huge rallies, huge dumps, big moves, momentum's on. It's kind of an exciting period for people that want to trade zero DTEs and those types of things because it's a very, very fast market at this stage. Compared to previous bubbles, this is where we sit, 0.7. So until we really cross that 10x threshold, we're not really in super terrifying territory just yet. Remember to subscribe to the channel. We'll update you when that occurs. Bonds market and, of course, the stock markets are disconnected a little bit at this stage. Although the bonds market is moving with yields, it's still not showing concern. So we'll talk about that because there was one small indication of concern on the Friday trade. And if it keeps getting worse, then, of course, we'll need to be on top of this. Yields completely switched. This week is another important Fed gauge, as we mentioned before, which we'll look at in the newsletter. And we know that this generally leads on to one of those important periods where we see Fed future rates change. If we get the Fed future rates back near October, I think that could break the markets at this point and send them back down. But if we obviously see Fed future rates go down lower as inflation gets better, then of course that will be the opposite and it could send markets even higher. Stocks net call volume, certainly elevated, certainly a concern, not as elevated as it has been two other times. And we live in the wacky world where there are just huge amounts of calls that are being bought across the board. And as we know, that means euphoria and FOMO here, as well as momentum-based trading. So just be careful out there, guys. Which sectors provide the biggest, let's say, cheapness in the markets? Well, it's got to be utilities and energy. You can see these are lagging the current market at this stage. And if oil in particular can break through that 80 barrier pretty heavily, then that's probably going to push the energy sector into improving and possibly even leading once again. That will be all predicated on Brent and oil breaking key levels we'll look at later on. For bulls, the Zweig Brett thrust still remains supreme. We talked about this in November and the beginning of it in October. This has really been the biggest bull thesis so far in 2024. A huge thrust that leads into bullish on bullish on bullish stat, which has currently been going on. For an investor, you've got to still like this market because the stats are in your favor. For a trader, you're probably starting to say, well, I'll trade the momentum, I'll trade risk range based trades, but I'm going to, maybe look for different opportunities. Single stocks probably one of the best places to do. And of course, it does remain to be seen whether a swing trade is going to get any kind of dip later on this year. We are in a historic period for it. Why do I say that? Well, if you look here, technically, we should be in a little bit of a weakness period at this stage. We're around here at the back end of February. And if we're going to see a sell, it tends to happen here and then tends to come back through in April with some strength. So really the sell window is theoretically within this stage right now. Generally the OPEX, the middle of kind of February, the back end of February, into the beginning of March, into the late end of March, tends to be where we sell. We just haven't seen it this year. And of course the markets have tended up. I believe if Nvidia didn't present a good earnings, we would have already been in at those. So it just shows you how much that stock's moving the market. And if that stat does come true, the 8 out of 8 stats so far, then expect the NASDAQ to underperform and possibly even the Russell, because during these sells that tend to happen in March, we usually see those two sectors or those two stock areas weaken the most. This one I've just left in the charts so you guys can see it. Slow cycles versus fast cycles. The way that the Fed cuts this year will tell us a lot about the market. Be prepared if they're fast cutting. If you're a bear in markets, set an alert for 16 plus on the VIX. As we've mentioned before, if we had got 16 plus on the VIX and closed last week, it would have been a hugely negative sign. It just didn't close. It wasn't able to do it. And are there opportunities around the world? Well, it turns out, yes, there are. China's bounce and thrust, the Shanghai Composite hitting those record panic breaths, obviously giving us some good stats from that reading. The Lunar New Year and the tendency to the markets to run afterwards. The fact that they're replacing a regulator and getting involved. All of those things are leading into the Chinese stocks looking a lot better. And as we first reported on this well over a month ago, this has been one of the better sectors or the better areas to be in. It may not be an Nvidia in one day performance or even couple of day performance, but it has been an incredibly replicable process. So we'll look at the charts later on to see whether there's more in those stocks moving forward. And you've got to be obviously very, very careful about your opinion on the long term for it, because it's probably some kind of relief rally from the brutal sell-off that has happened to Chinese stocks over the last 2.5 years. Let's now talk options expiration, because of course we know that options were heating up last week and that 5,100 remains that big closure level. A break above 5,100, that's going to push us to that 5,150, probably 5,200 level realistically. And we know that really that's the most important level. Now, what happened last week was we saw these huge amounts of puts just float around the 0 DTE strikes underneath. And this was all ahead of Nvidia. And what that did was it made it quite profitable for the market to also go up to expire those puts worthless. And obviously hedges were causing the market to go through. Now we're in some kind of call, let's call it squeeze. So if we do end up get through those 5,100 levels, then expect the 5,150 and 5,200 to potentially come true. Let's have a look here at what happened on the Friday session. You can see it just held underneath that 5,100. And as we know, if we get through 5,100, then the next movement is realistically going to be probably upwards of that 51.30 to 51.40 zone in the 0 DTEs. There's quite a lot holding the market around this level though. So I think this will be an important point for not only Nvidia to see whether that stat comes true, but also to see whether the market actually has that much more momentum in it. Breaking through 5100 is a big zone. Let's talk stocks now. And we know that Bezos has been selling heavily in Amazon, but we've also seen some other large trades come in. One of the largest trades of recent history has just come through, and that's in line with previous sells that did occur over here. Now, as you can see, these are mostly probably Bezos and a few of his friends selling off positions in Amazon. He has been selling a hell of a lot of this stock, but it does beg to question whether we're back at a resistance and therefore a sell point for Amazon into seasonal weakness. The next one I want to look at is, of course, got to do with treasuries. We saw here this triple leverage treasury fund go from super low, or where this is where treasuries were absolutely flogging it, to basically moving down. So this is an inverse of it. So what happened here was that we saw one of the largest trades go through at the lows. In this case, it was actually the high for treasuries, and then they've just sold out. So is this the bottom for treasuries? Take a look here at the treasury signal without, of course, using some type of 3x leveraged fund. And you'll notice here that treasuries recovered a little bit last week. Now, that's going to only happen if we're seeing yields coming down. So remember, this week's the Fed's inflation gauge. If the Fed's inflation gauge looks like things are getting better, then expect yields to come down. Obviously, 4.7%, a very important point here for the 2-year. And if that does end up happening, then we're probably going to move up in treasuries, and it will regain that important level. Now, it needs to regain around 94.50. And if it does remain up above that level, that's a great sign for treasuries holders. And look, we've talked about this before. We still remain bullish on treasuries over the next 12 to 18 months. If we talk about short VIX futures, well, we did see some large trades coming through it last week. People are starting to bet on the VIX, but not enough trades for us to yet see some kind of inkling that we're seeing an inbuilt amount of, let's say, increased volatility coming through. Let's now talk about options, because of course we were seeing some unusual options activity last week, and it was specifically in a couple of stocks. Now, which ones were going the hardest? Well, of course, it was Nvidia, 2.57 times the overall normal average at almost 2 million calls here. Huge amounts of trades there. But there was also some big trading going on in SMCI when it lost 11.8%, and you can see here 5.39 times average. Most of the trades were going into semiconductor stocks and big tech, and they were all pretty wild. So we had 44.6 million, 58% calls, so still a very overbought call market, which is very unusual at this stage, but that's what it's been like for a few months now. And retail has made up around 30% of the legs. So a lot of trading going on, a lot of options going on, and the options market remains very important to look at. So we'll be doing that, of course, in our weekly look ahead for Nvidia and a few other stocks. What's going on here with the skew? Well, the skew got crushed. Now, historically, that's an early warning sign, okay? So it happens about a week ago. Then we got the Nvidia earnings, which obviously pushed the markets up. Now we have the stat that says the last 8 times that happened to Nvidia, technically the market sells off. It's very, very questionable. If you're going to go with the market is weakening here, obviously you're going to have to use options. Obviously, you're going to have to look ahead, because you can't really be doing it on, let's say, a CFD or a futures trade right now. It's way too dangerous. But the skew certainly is a negative sign. It's only one confluence signal, though, so you've got to remember that. It's only one. When we talk about central bank liquidity, it's flat as a tack. So when taking into everything in consideration, both the US and the worldwide central banks remain not really extremely more elevated as the markets rallied up, but they remain about the same. So they're not really that supportive of this move necessarily. When we're talking about yields hit the 4.7, which is one of our key levels for the 2-year yield. I think this is probably going to be the straw that breaks the camel's back when it comes to if the market does break through 4.7, because of course, if we get through 4.7, guys, what does that mean for us? Well, it probably means that yields are going up to 4.9. That's going to push treasuries down. That's going to push the market down. And it's probably going to push the US dollar up. So be watching specifically the US 2-year this week, just in case it does break through that 4.7. What about the bonds market? A lot of you correctly figured out that the high yield bonds market wasn't freaking out ahead of Nvidia. That's absolutely true. and it, in fact, was strengthening into the market. So that's a good sign considering what yields were doing. So the bonds market looks okay. But as you know, we've got a bonds market indicator, and that's kind of shown us there a little bit of weakness on Friday. Still very early days here, not enough to go off, but something we are, of course, looking at. Let's also talk copper. This has been a pretty strong section of the markets recently, with copper rebounding up to that 3.9 area. A break above 3.95 to 4 is going to be a huge deal for copper. Make sure to set that alert, and also make sure to just have your alerts here for home builders as well, because home builders can be an early warning sign. At the moment, it is all green, all good. So as you can see, when you're looking at the weight of averages of what's weak and what's strong, it still remains that most of our early indicators, other than the skew, are still remaining fairly bullish for now. So you have to probably be on the side of the bull side, although Nvidia will really be the dictator here, and that particular stock does have that interesting stat on it. Let's move over to the dollar index. Strong hold, 2 days now. Big hammer on the daily time frame. And as you can see here, this demand is currently holding. Now, if we can break out of this trend line, that should be a pretty big deal. We'll set some alerts here together just above the 104.13, because I think that level is going to be relatively important for the bulls. And if we do get through this, then you're going to see weakness on, of course, the Euro USD and everything like that. Now, from the Euro USD strength standpoint, this is such an important level for the dollar index. If you have a look on the daily, you can see here the daily 20, how it's held this market on the way up. And if we don't get the rally through these last 2 week rejections and we start falling off and break below, that's going to push the euro up, break trend lines, and it's going to push the dollar into what you could possibly see as a partial free fall. It's probably waiting for the Fed's gauge, though, in terms of what's inflation doing. So it might sit around for a little bit more. UK oil and US oil, a little bit disappointing here for the oil traders. The markets have been, I would say, just trying to get through and then unable to do it. And I just moved one of those then. But you can see here that this was a very important zone. So we spoke about the idea that oil was starting to heat up around here. It was looking pretty good. It didn't quite manage to get through that 80 level. Now, if it had done that, 82.50, 84.50 all day, it gave us the first inflection of this. So this has been touch and go here, and it's kind of just barely holding on. This is a very important level at the time of this recording for oil to hold. It needs to hold around here, find buyers, and if it doesn't, then things are starting to weaken on the oil front, and maybe that trade is gone for now in terms of the bull side. So just remember, both UK oil and US oil must be watched. You also want to maybe look at CL futures, because all of these things are important. But yeah, oil up to 84.50 would be sweet, because that would be a great level to see it at. But at this point, it doesn't look like it wants to do it just yet, holding but a thread. Let's move over to gold. Trading around the most traded zone makes it a very difficult trade. And as we've mentioned a few times before, it's very hard here in terms of the way you want to trade it. We did have kind of a short read that came through here, and then it went down a little bit, giving break-even style trades, found this level of demand, and bounced straight back up and through the most traded zone. I would say it's a question mark which way gold is going right now, and really I'd be waiting for the dollar index to tell us which move it wants to make. Once it's done that, then it'll look better. What about Tesla? Well, as we first reported over here, credit sellers have been the big winners on Tesla, and that's because the stats were super bullish for Tesla over the next 30 days. And really, we had kind of like a scenario of sideways or up being the most likely scenarios. So far, it's been sideways. So sideways is great for a credit seller and bad for a bull buy. Now, we don't have any breach through 200. We know that that's a call inflection point where we go really to a much more positive style market. And unfortunately, until we break through that level, we're not really going to see much on Tesla. It's still holding throughout this zone though. So a lot of people are saying inverse head and shoulders. A lot of people are saying we're going bullish. I would not discount that as a possibility here, but EV car companies obviously struggling at the moment, Rivian and others coming out with some terrible results, and that's causing downward pressure on Tesla across the board. So trend at this stage is, I would say, neutral, and 200 plus would be very, very bullish. Let's move over to Nvidia now. So we saw those stats before, the up with the down, and when we get those kinds of gaps, we are at toppings of potentially this market. Now, it's been a huge rally, so calling a big sell is very, very difficult. But if you go through history, you might notice around a lot of earnings results, we do tend to see these big rallies with solid dumps straight afterwards. And that's because that's the way Nvidia likes trading. It's kind of the new Tesla in terms of retail traders love it. You can see here earnings, huge gap up, and then slowly kind of goes down. Now, one of the reasons for that to occur, it has to do with that we lose the catalysts of bullishness. So basically that this was so bullish, everyone's catalyst, everyone was upgrading, everyone loves it, and then we have to wait for the next earnings and the next hype cycle. So as the hype comes out, it kind of becomes that buy the rumor, sell effect. No doubt the trend is still up. We absolutely have no reasoning other than the stat to say that this market is currently short or anything like that, but we will look for some other reasons moving forward just in case. So I'll do some more studies on this and I'll put it out in the newsletter if we see anything. SMCI, on the other hand, is a little bit different. This stock actually lost a huge amount in one day. I would say a big trader came in, they sold it pretty hard, and then it rallied up very, very strongly off the back of rumors because of Nvidia's stock. Now, 33% is no joke. This stock was pretty much destined to fall the next period. 1,000 is a great sell. Now, I think it's going sideways to even sideways down over the next 3 to 6 months, and I find it very difficult to see SMCI at a new high. Now, it is possible, anything is, but statistically to me, even if it did make a new high, it should be short-lived. This stock looks to me like it's in a holding pattern to an even downward spiral. So 1,000 remains a pretty heavy resistance for sellers at this stage with this market. And we did, of course, share that over on our X if you're interested in more information. Let's now talk about HSI, the Chinese stock market. It's been doing pretty well recently, 16,700, still sitting right around the 20 moving average on the weekly. This is a big breakout level for it. 16.5 already broken on the smaller timeframes on the daily and such, which is excellent, of course, for this market in terms of rallies. And it's been a pretty good run so far. I would say that most of these markets look a lot better than they did maybe a month ago. And things like KWeb, things like really anything to do with Barber and all these other stocks that people like or tend to always look at have been improving. A lot of trendline breach outs in the recent weeks. So if the market keeps improving like it generally does in these Lunar New Year cycles, then we're hoping for further rallies as it starts to take off a little bit of the sells in the Chinese stock market. I think some people are waking up to some of those stocks actually being profitable from the AI standpoint. We'll find out whether they are or not. US 2K sitting in the middle of nowhere. The Russell 2000 doesn't tend to perform very well during March. It had a pretty disappointing start to the year, in my opinion. Obviously had an exceptionally good late end December period in 2023, and it remains in an ascending kind of channel for now. So bottom end obviously could be support, top end could be resistance. At this stage, the trend is still up for the stock market, but really S&P will drive it all. Let's move over to the Qs. Still holding its own. You can see here on both the futures and the main market that really it's just holding that 20 as well as it can. And it keeps kind of rallying up, making new highs. Although, notice that the NASDAQ barely made a new high. So we're starting to get some interesting levels for swing traders coming forward. I'm not going to use the NASDAQ, though, as the main leader for this market. Of course, it's got to be the S&P 500, which will load right now. 20 moving average is clearly where the swing traders will be switching everything in this market. 5,100 was obviously hit. It went slightly through it, pushed back down to just underneath 5,100, which is obviously that massive res market for the calls. And really, I think it comes down to how does Nvidia trade at this stage. So we're in super overbought territory on a lot of US 500 reads. Even a very rare run, a TD13 has just been posted a few weeks ago in the US 500 around this level. It's very rare for us not to get a turn at these points. Of course, statistically we should, but yeah, as we know, price action is the number one most important thing, and structuring and positioning. And at the moment, it's been very profitable to push these markets higher. I still think without Nvidia's big result, though, we wouldn't have been at this new high, and we already would have been through that 20 moving average. So obviously, it all comes down to whether that stock trades that stat that it always has in the past. Let's now move over to some other interesting markets, though, which is, of course, the crypto market. It looks like Ethereum is trying to break out. Now, this is a trend line that's pretty serious, and we already know that ETH versus BTC is a pretty huge thing. When we see alts start to come through, that usually means the beginning of a bit of money flow. And we often could be holding with Bitcoin where it sits around a zone, maybe even weakens, while things like Ethereum and other alts start to improve. Well, the first signs of improvement are here because, of course, we see Ethereum rallying through. And as we kind of suspected, once we get through 3,000 for Ethereum, it's more than likely we're going to that 3,500 zone. So this is a good sign for ETH versus BTC. You can see here Ethereum 3,540, or probably about 3,500 actually, being the main key level that it could be moving to as it goes directly up. And this is probably now one of the hottest coins out there in the markets. Bitcoin remains kind of solid around this level, but as we've talked about several times before, we may be in what we call a Wyckoff distribution or accumulation. Pressure being put on the bottom end, a UT here, a buying climax here, and markets kind of hovering around the zone. As long as it keeps hovering though, Ethereum could be on its breakout. It does look to be doing that right now. For the week ahead, everyone, we've got quite a lot of information. Of course, we've got core PCE price index, ISM manufacturing PMI, and revised UOM consumer sentiment for the US markets. A few other things that are read around the world. But just remember, everybody, that it really comes down to Nvidia this week. This is a momentum-based market, and it's individual stocks as well that you're going to be wanting to look at. The Pan Ws of the world, the SMCIs and the Nvidias, just show us a little bit of insight into how fast these markets are moving right now. If you're interested in finding out more, remember to subscribe to one of our other socials down below. VIP free weekly newsletter as well, guys. And thank you so much for being a member of the community. We'll see you very soon. Bye for now.